Welcome back to FT.com. Will they or won't they? Washington's flirtation with default has been postponed for now, so markets have their eyes peeled on Janet Yellen, Ben Bernanke, and their colleagues on the Federal Open Market Committee. And the question is, of course, when will they taper, i.e. slow down their asset purchases? To discuss how markets are looking at this issue, we have today our very own Jamie Chisholm, the FT's global market commentator. Welcome, Jamie.
Hello there.
Isn't it true that markets have actually priced in the possibility of tapering for some time already?
Yes, well, as we can see from the chart here, the rise in yields which took place around May time, which almost went back up to 3% on the 10-year, suggests that the market was saying, okay, tapering's coming. So to a certain extent it has been priced in. And as you can see, the dip down over the last few months has occurred, this last bit, for example, when they had the phantom taper, if you want, in the previous meeting in September. But as you can see, there's a big gap there between the two.
One percentage point,
they're expecting the tapering to come, which is quite right. It's a question of when.
But because this started when Ben Bernanke actually started trying to signal it.
Exactly, yes. So the market needed to start pricing that in. It couldn't really expect the yields to be down this level if the Fed wasn't going to be purchasing assets at the same pace it had been previously.
So in terms of the actual capital markets, there's been a kind of tightening already. Well, what do markets expect today? What do you hear from the people you talk to?
Well, what it seems to be, of course, is that since the previous phantom taper, as I called it, the situation deteriorated. We had the government shutdown, which has seen cutting growth. We've had some meek labour market data. We've had some actually quite poor for a few months now housing stats, relatively. So the market now is pretty much convinced that the Federal Reserve will do nothing at the October meeting, but of course it was wrong-footed in the September meeting. However, the Fed, I think, is quite happy to wrong-foot people if it's a bullish thing. In other words, giving them something they want unexpectedly.
Surprise.
Exactly.
Yeah.
They very rarely give them a negative surprise. They don't like doing that at all. So
which maybe this was, right?
Well, this from here was, that wasn't.
Right.
So it's almost as certain as the market can be that the Fed will leave tapering at 85 billion a month.
Let's look at some of these economic indicators that the Fed presumably is looking at. These are jobs data. Can you tell us what we're seeing here?
Yes, exactly. I mean, as you can see, if you squint and look at it just going down, it's not been as strong as people expected it to be. The unemployment rate has come down to 7.2%, but that's partly because the participation rate in the US economy has been falling drastically. It's at multi-year lows, multi-decade lows, I believe. And the rate of jobs growth is simply not strong enough at the moment, people feel, to justify the Fed cutting back on its quantitative easing.
What sort of levels will we need to see?
Well, that's a very big question. Look, in terms of historic gains, we need to be seeing them up here somewhere. But crucially, of course,
we had for a few quarters up there. Yeah.
Crucially, we need to see the unemployment rate coming down with participation going up at the same time. At the moment, we're not really seeing that.
And we're quite far away from the Fed's magic number, which is 6.5%.
6.5%, yes. So at the moment, it looks like they're going to keep on going. Of course, many people, well, not many, but quite a few people believe that tapering isn't actually helping with the unemployment rate much anyway. But they're persevering with this because they perceive that it helps. It certainly suppresses yields, which encourages people to move into the stock market, which has encouraged people to feel better off, which the Fed believes ultimately will help the stock market. Sorry, will help the economy.
Right, but for now, there isn't all that much sign of the economy going any faster than this. I mean, I've even heard some people say, well, it could be another year before they start tapering. But what is the best judgment of what they'll do at the meeting this week? Wednesday this week, we'll get the conclusions from this meeting.
Right, so Wednesday this week, no change, what the market believes. The dollar is already at an 8-month low. It thinks tapering is going to keep on going for a while. Yields have fallen 35 basis points on the 10-year since the phantom taper incident. In other words, people think tapering will continue to go on. The market is positioned for tapering to continue. However, as the months go on, they're going to have to start to get used to the idea that it will come, and for goodness sake, it's got to come soon.
Yes, Jamie, thanks very much for that. So there you have it. Tapering will have to come sooner or later, but for now, markets are looking more at later than at sooner.